Hi, this is Tim Yoder with Fit Small Business. Today I will be evaluating FreshBooks for Chapter 1 of the Fit Small Business case study. So Chapter 1 is just setting up our general information. So I have got a trial subscription to FreshBooks and logged in, and this is where it brings you. So it does ask you some information. You can input some of your basic company information through their wizard. Or if you do it from this screen, so we need to enter our basic company information. So we'll find that in our settings up here. Okay, and so this is the name I used to sign up for the company. So here we can input all of our company information, pretty straightforward. Phone number, address, so forth. Okay, so that's our telephone number. Email address I entered as when I signed up for the subscription, so it automatically has that information. The case study asks us to enter our method of accounting as accrual. There's nowhere to enter that information, so I think it's going to have accounts receivables and accounts payable, so it will be the accrual method. It doesn't look to me like there's any way to report on just the cash method if you do bills and invoices. Entity type of an S corporation. It doesn't let us enter the entity type, which is not a big deal. It's not generally necessary for keeping your books. And then it asks us to enter our fiscal year end of December, which is more important. And here is our fiscal year end, December 31st. So all of that looks really good. The case study asks us to track expenses and income in 3 different classes: HVAC, plumbing, and administrative. There is nowhere in FreshBooks to be able to do separate classes. We also want to track separate locations, New York and Delaware. There's nowhere in FreshBooks to do that either. So let's look at our scorecard in the rubric here. So we were able to input the company name, address, telephone number, email address. We weren't able to do the entity type. We did put our December 31st year end, and we couldn't create classes or locations. So now we're given, the case study gives us our beginning trial balance, so our December 31st, 2020 trial balance. And so we have to enter that into FreshBooks. So we can go down here to accounting and go to our chart of accounts. View your accounts. So this gives us our chart of accounts. Now unfortunately, more actions up here doesn't let you do much. All it does takes you to your general ledger. There's nowhere to edit your chart of accounts as the owner of the company. So I've done a little research. That seems very odd, but that's just the way they have it set up. And the rationale being they don't want the owners to make mistakes that will mess up their books. So the only person that can alter your chart of accounts or do journal entry. So the only way to input a beginning balance in your account is to do a journal entry. The only people that can modify your chart of accounts and make journal entries are accountant users. So you can't do that as the owner. So what you have to do is invite an accountant. So under my team here, we'll see that I've already invited myself, Tim Yoder, as an accountant user. And so to do so, all you do is go to invite, and then you have these different classifications of users. So you would just invite accountant, put the name, email address. Once I did that, it sent me an email. I clicked OK on the email to join the Fit HVAC team, and it added me very easily. It doesn't require any accounting credentials, doesn't require an accountant version of the program, anything like that. So you could do the same thing I just did. If you're the owner and you want to be able to do these accountant functions, just get a separate email address and you can set yourself up as an accountant. So it is a pain. You're going to have to flip back and forth between the things you can do as the owner and the things you can do as the accountant. So we need to work with the chart of accounts with our beginning balances. So I'm going to have to log out as the accountant and log back in as the log out as the owner, Paul, and log back in as the accountant, myself here, Tim. So I'm going to pause the video. I'm going to log out and log back in. Okay, so I am back. I'm logged back in now as myself, Timothy. You can see my options, my menu here has changed a lot. So the accountant can only do certain things. Okay, but the one thing they can do that we're interested in right now is under accounting, we can modify the chart of accounts. So go to chart of accounts. Okay, so the case study gives us the chart of accounts we want, and so I've had to go through and I've already added a bunch of these accounts. To add an account, it's very easy. You can click add new account, give it a name, give it a parent account, and it'll assign an account number. So the account numbers in here, like so if all cash accounts are 1,000, that's set. You can't change that. It gives every account you add under cash, assigns the next account suffix. So if we added another cash account, it would be 1000-4. Okay, so that worked pretty well until I got down. I was able to add cash on hand, checking, savings, accounts receivable is already there. I get to inventory. There's no parent account for inventory. So what I had to do is I had to add inventory, and you have to assign it a parent account. And there is no inventory parent account. So I had to assign it to property, plant, and equipment, which is completely incorrect. Inventory is totally different than property, plant, and equipment. But I had to get it on the balance sheet somehow. And so that's the only way I could do it. I assigned it to property, plant, and equipment. Good. So I added some equipment and vehicles. I added an accumulated depreciation account. Accounts payable was already there. Good. Credit card payable was there. Now the credit card's parent account was there. The credit card payable was not. So I had to add in a credit card payable, because when I go to do my journal entry, you can't make a journal entry to the parent account. You can only make journal entries to the sub accounts. Okay, so I had to put in a credit card payable sub account to the credit card's parent account in order to make my journal entry. I had to add a loan payable account. There is no loan parent account. So I think I put loan payable right here to the unearned revenue, which again is completely incorrect. A loan payable is not unearned revenue, but I got to put it somewhere. And you can't add new parent accounts. Okay, and then in our equity section, we had to have common stock, retained earnings, and additional paid-in capital. So that does it for our adjusting our chart of accounts. Not at all satisfied with this because you can't. Everything has to have a parent account, and you can't adjust the parent accounts. And so I'm going to say the chart of accounts isn't. You can't modify the chart of accounts because you can't modify those parent accounts. So in our scorecard, I'm going to give it a 0 for modifying the chart of accounts. Okay, now we want to input our beginning balances. There is no way to input them other than a journal entry. So we will go ahead and do a journal entry here. So we can see in the chart of account, new journal entry. Only the accountant can do this, so I have to be logged in as the accountant, not as the owner. So I'm going to make a new journal entry. I wonder if I can view the journal entry that I've already made. So I've already gone through this once and did this. So what I do is I named it beginning balances and gave it a date of 12/31/2020. Okay, and then just went through and shows each account. Okay, notice you can't choose the ones that are kind of faded. Those are your parent accounts, and you can't choose a parent account. You can't make journal entries to the parent accounts. You can only make journal entries to the sub account. So you have to make sure you have a sub account for every parent account. Okay, so everything is there that I need. I just go through, make my journal entry, all of my debits, all my credits, they equal each other. That's our beginning trial balance on December 31st, 2020. So to verify everything's there, we can go to accounting. Let's see, do I have reports? Yes, reports. Um, the first place I looked was the trial balance. And the trial balance for 2021 doesn't show anything, which worried me that it didn't work. But if we do the trial balance for last year, we can see that our ending trial balance from last year is correct. Well, our ending trial balance from last year, these are all asset and liabilities account. These don't disappear at the end of the year. They roll over to the next year. So when we then look at this year's trial balance, these numbers should roll over, and they don't. So that's troublesome. But I think as soon as we have some 2021 transactions, those will roll over. But they should roll over now. They're balance sheet accounts. They should roll over. So it does look like our journal entry is there. And to verify here, let's look at a balance sheet. That's another place to look. And so here we go. Our balance sheet does show that journal entry that we made. Okay. So let's score this. Input the 12/31 beginning balances. We couldn't input the balances. We had to do a journal entry, so I'm just going to give it half a point. There's no way to close the books prior to 2021, so it's nice if you can lock things so nobody can make an entry in a prior period. There's no way to do that in FreshBooks. Okay. Now the rest of the chapter 1 asks us to add an additional user. This is Jane Doe, and we want to limit their access to recording and paying bills. So essentially they're going to be our accounts payable clerk. And so we want to see, can we set up an accounts payable clerk and limit her activities to only accounts payable? We don't want her to be able to look at invoices, payroll. We don't want to look at anything except accounts payable. So can we do that? Well, first off, we're going to have to log out. We're done as our accountant now, so our accountant can't invite any users. So we got to log out as the accountant, log back in as the owner. So let's do that. So I'm going to pause while I do that. Okay, so I'm back, and I'm now logged in as Paul, the owner of the company. So we need to invite somebody to be our accounts payable clerk. So I'm going to go to my team, same place I invited myself as the accountant. Okay, so I can invite, and so it doesn't allow us to set custom permissions, but it does give us set permissions. So one set of permissions for admin, for manager, employee, contractor, and accountant. There is no position for an accounts receivable or accounts payable clerk. You can't set custom permissions, so we couldn't design one ourselves. So there's no way that we can have an accounts payable clerk that won't be able to see everything else. So we can't invite the accounts payable clerk. So to our scorecard, add an additional user. We can add additional users, but we can't restrict the rights of those additional users. There's just those few pre-canned positions, but not one for the accounts payable clerk. So can we import our chart of accounts? No, there is no option for importing the chart of accounts. Again, the only person that can even modify them is your accountant, and they can only modify them to a very limited extent. And import beginning balances, nope, we had to do a journal entry. Okay, so that is chapter 1 of the Fit Small Business case study for FreshBooks.